What gives Shopify stock so much optimism among investors? Once a darling of the tech market, Shopify is now a market heavyweight whose decisions have far-reaching impacts. Honestly, if you question that, so it's time to rethink. Shopify's growth has been phenomenal, even before the epidemic, and here's why investors are still bullish on Shopify stock. Shopify stock has dropped by almost half since its peak on November 19, leaving some investors shaken and others wondering if now is a good time to buy, possibly with free shipping. However, some investors remained headstrong, saying the company had stellar growth even before the outbreak. Therefore, they're bullish over its long-term run. Why investors are still bullish on Shopify stock? Shopify stock is down 79% from its all-time high and is trading at nearly its lowest price-to-sales ratio in the previous 5 years, making the company a more attractive investment. Despite skeptics, remember that most tech companies have been unprofitable during periods of rapid expansion. For the past 2 quarters, Amazon has also experienced this phenomenon, which manifested itself as decreased profitability for the internet giant. Most investors bullish over Shopify claim Shop is positioned for maximum growth following the economic slump thanks to its large TAM, multinational relationships, and aggressive market penetration.
Extra.
Moreover, since Shopify elected to postpone profitability in favor of aggressive market penetration and rising market share, it is safe to say that the company is still at the growth at all cost stage. Shop held a 33% market share in the United States as of August 2022 and was in the second position globally with a 23% share, behind WooCommerce with 26%. In another sense, investors have even more reasons to be optimistic about Shopify stock. Are you aware of the reason? Basically, Shopify has got an expansion strategy that appears promising. In a few minutes, you will discover additional details. Shopify's stock history. Before the pandemic, Shopify's revenue skyrocketed from $24 million in 2012 to $1.6 billion in 2019. Thus, Shopify has benefited from the widespread trend toward online purchasing, which is expected to continue. In 2020, when the epidemic peaked, e-commerce accounted for only 14% of all retail sales in the United States. Shopify's expansion strategy. Shop's expansion strategy should please long-term investors because it will generate enormous returns in the future. The stock market is a device to transfer money from the impatient to the patient, as Warren Buffett calls it. Despite the reopening pace, we're beginning to see positive returns, with a good gross merchandise value of $46.9 billion and monthly recurring revenue of $107.2 million in the second quarter of 2022, indicating a year-over-year increase of 11% and 13%, respectively.
Wait, there's more.
Shop is also successfully monetizing its international advertising and social media platforms through its growing relationships with industry leaders like Alphabet and Meta. So, despite the bear market, most investors aren't worried about Shop's profitability or share prices. Only from the bottom can things rise. The stock market is volatile, and investing can be difficult for those who lack financial expertise. Since we are well-versed in these topics, we regularly provide information meant to inform and update you on developments in the financial sector. If you're looking for the most informative and entertaining videos on personal finance, you found the right channel. Therefore, subscribe with post notifications turned on. Moving on, Shop's management is clearly prioritizing the growth of the company's long-term capabilities over its short-term profitability, as evidenced by the company's aggressive expansion of operational spending and capital investment so far. The company's operational expenses reached $0.81 billion in the second quarter of 2022, up 76% year-over-year and 261.2% from 2020's second quarter levels. Shopify stock prediction. Shop's revenue is projected to expand at a CAGR of 25.58% over the next 3 years, and the company may reach a break-even point in net profitability by the fiscal year 2023. The statistic indicates a slowdown compared to either the 59.48% seen before the epidemic or the 70.94% seen during it. The new revenue forecast is a clear 15% lower than the consensus projection from April 2022. This lowered profitability from 2022 to 2024 is another piece of evidence of a somewhat pessimistic long-term forecast. For 2022, analysts predict that Shop will report $5.49 billion in revenues and a net loss of $0.12 billion, for an increase of 19% and a decrease of 95.8%, respectively, year over year. However, most of this was caused by investment losses, totaling $2.57 billion in the first half of 2022 and investment gains totaling $2.85 billion in 2021. After making certain modifications, it seems likely that Shop's aggressive spending and lack of profitability in the newly established fulfillment network are to blame for the drop in its predicted profitability in 2022. Shop has a price objective of $46.28, which is a small 14.5% upside. But it is clear that analysts are being more cautious now after the COVID-19 stock party and hangover. That is a shockingly steep drop compared to the all-time high of $166.83 in November 2021. We estimate the stock will easily triple by 2025, if not more. So long-term investors who bought low have nothing to worry about, even though the stock is unlikely to see similar levels again anytime soon. Well, is Shopify stock a run for your money? Whether yes or no, find out in the coming moments if you should buy. Should you buy Shopify stock? Given the current climate of rising prices, higher interest rates from the Federal Reserve, and a possible economic slump, these investments may appear risky at the time. We remain optimistic about Shop's growing capabilities, since the company will be in a prime position to rapidly grab key market share once the economy revives, sparking a blazing desire for online shopping. Hold tight for the long haul while Shop expands, and don't worry about the short term. Eventually, once it reaches a certain inflection point, profits will follow. Investors may want to wait for Shop to retrace meaningfully to the low $30 before adding more, as that level has served as support historically over the past 3 months, despite the stock's recent surge post-earnings call. If not, bulls might keep buying the dips. Shopify offers resources for enterprises of all sizes to launch and expand their online presence. On average, it collects a monthly fee plus a cut of the revenue generated by the websites it promotes. As a matter of fact, it can capitalize on the market gap between e-commerce and conventional retail sales. Shopify's Meteoric ascent reflects the increasing number of companies that prefer it to its rivals. Customers are expected to keep coming in because of how its business strategy helps small businesses. In light of the foregoing, investors would be happy to purchase Shopify stock at the current premium. Another thing investors will be happy about is Tesla's stock split. Do you know why? Watch our video, Why Tesla's New Stock Split is Exciting Investors to Know. Thanks for watching today's video. I hope you enjoyed it.